Ladies and gentlemen, good day and welcome to the GAIL India Limited Q1 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prabal Sen. Thank you, and over to you, sir.
Thank you, Seema. Thank you everyone for making the time to attend this post Q1 23 financial results call of GAIL India Limited. We are pleased to have senior members of GAIL India's management led by Mr. Rakesh Kumar Jain, the CFO, with us. I will hand over to him immediately for some opening remarks and a brief on the numbers, and then we can move into the Q&A. Sir, over to you.
Thank you, Prabal. Good afternoon, Mr. Prabal from ICICI Securities and my dear friends from investors and analyst community. A very warm welcome to GAIL's earnings call for Q1 financial year 23. We are thankful to you all for showing keen interest in this earnings call. The results for first quarter have been declared earlier today, and I am sure that you would have gone through the same. Before I give insights on the financial performance, I am happy to inform you that our company has received nil comments from CAG on the accounts.
This call is now being recorded.
On the financial year 21-22. This is the 13th consecutive occasion when the company has been able to achieve this feat. Now let me take you to financial highlights. GAIL achieved gross turnover of 37,536 crores in the current quarter as against rupees 26,909 crore in Q4 financial year 2022. This is an increase of almost 39%, and the increase is mainly due to higher natural gas marketing and transmission volume, higher gas prices, both domestic and RLNG, higher LSC prices. LSC prices are higher by average almost 12,000 per metric ton. Higher petrochemical prices, this is higher approximately by 18,500 rupees per metric ton. However, this hike is partly offset by lower PC sales quantity in Q1 23 due to annual shutdown of petrochemical plant in the current quarter, that is quarter 1. Profit before tax increased to rupees 3894 crore in current quarter as against rupees 3546 crore in Q4 financial year 2022. This is an increase of 10%, and increase is mainly due to, as I said, with respect to revenue, the improved performance of gas marketing segment. However, this was partly set off due to reduced profitability in gas transmission, liquid hydrocarbon segment due to increase in price of domestic gas used in internal consumption. That increase is well known to you. That is $2.9 per MMBTU to 6.10 per MMBTU. Petchem profit also reduced in spite of higher prices and realization, and this reduction is due to lower production, as I said, in Q1 23, and sale and higher cost of input gas during this quarter. Profit after tax increased to rupees 2915 crore as against 2683 crore in Q4 22, financial year 22, and this is an increase of 9%. And on similar accounts, as I stated, with respect to PVT. Segmental performance for the current quarter versus previous quarter. Our gas marketing volume stood at 100.84 MMSCMD in the current quarter, as against 94.69 MMSCMD in previous quarter. And the increase in volume is driven by higher RLNG sales and also overseas sales. The natural gas transmission volume stood at 109.47 MMSCMD in the current quarter, as against 107.56 MMSCMD in the previous quarter. The capacity utilization for pipeline is 53% as compared to 52% in last quarter. Polymer production stood at 132 TMT as against 194 TMT in last quarter. And on this 132 is almost same if we compare with the Q1 22 because we had annual shutdown in both the Q1 22 and 23. However, if compare it with the Q1 of last year, we have experienced a very high PC prices, as I said, and current quarter the average PC price is 1,26,000 per metric ton. With respect to LSC, the production stood at 227 TMT as against 212 TMT in previous quarter. The capacity utilization was 64%. Liquid hydrocarbon price increased significantly, and the average realization in the current quarter was 74,100 rupees per metric ton. Cost of input gas for LSC segment is primarily driven by domestic gas prices. From April 22, the cost of input gas prices increased to $6.10 per MMBTU from $2.90 per MMBTU, which led to increase in cost of production. In respect of LPG transmission, transmission was 1055 TMT as against 1065 TMT in previous quarter, almost the same. The capacity utilization was at 110%. And coming back to the consolidated financial of Q1 23 as compared to Q4 22, financial year 22, the consolidated turnover in the current quarter stood at rupees 37901 crore versus 27263 crore in previous quarter, almost 39% up. The PBT in the current quarter is 4230 crore versus 4375 crore in Q4 financial year 2022, down by 3%. The PAT is rupees 3253 crore versus 3454 crore in Q4 financial year 2022, down by 6%. With respect to GAIL CGD, that is a 6 CGD we are operating in GAIL. And in terms of infrastructure, we have 121 CNG stations. In terms of DPNG connection, we have 218,000 DPNG connections. And during the quarter 1, Q1 23, one new CNG station and 17,000 new DPNG connections were added. And now with respect to GAIL Gas, during the current quarter, the gross turnover stood at rupees 2658 crore as against rupees 2102 crore in Q4 financial year 2022. This is an increase of 26% and again mainly driven by increase in average gas price. The PBT was marginally down at rupees 97 crore in current quarter as against rupees 103 crore in previous quarter. Profit after tax also declined marginally to rupees 72 crore as against 74 crore in previous quarter. The physical volume during the quarter remained flat, approximate 6 MMSCMD. GAIL Gas, along with its JV subsidiaries, has an infrastructure of 8 lakh DPNG connections and 341 CNG stations. During the quarter, 2 new CNG stations and 21,000 new DPNG connections were added. In terms of capex, GAIL achieved capex of approximate rupees 1,975 crore during the current quarter. This is mainly on account of pipelines, petrochemicals, CGD projects, operational capex, equity contribution, and E&P. We have planned to spend approximate rupees 7,500 crore in current financial year, and mainly on again pipeline, petrochemicals, CGD, and equity. With respect to project performance, 121 km of Bokaro-Angul main line commissioned on 30th June 2022. 412 km was commissioned till March 2022. So Bokaro-Angul pipeline, now it is making total 533 km. This was inaugurated by Honorable PM on 12th July 2022. The work along various projects, PP, projects at Pata, PDHPP at Usar is going on as per schedule. That's all from my side. regarding the overview of performance and projects. The management, the team of respective executive directors from all the segments are available here, and we'll be glad to clarify on any questions that you may have. Now over to you, Mr. Pawar.
Thank you very much, sir. Seema, we can open up the floor for the Q&A.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you.
गेल का करना है ना, वो लिस्ट में नहीं है क्या आपने?
We take the first question from the line of Maulik Patel from Equirus. Please go ahead, sir.
Hello.
Yeah, go ahead.
This is regarding the LNG volume. For the quarter, can you see how much of the cargoes you have received from the US and Gazprom?
Q1.
Yeah.
Yes, hold on.
Yeah, we cannot give the exact breakup of the Q1 cargoes, but go on. But overall, we did purchase some both the US and other suppliers from the which are Brent-linked contracts, and we did also purchase some spot cargoes to meet our spot gas requirements in the market.
This is with respect to this news in the media that Gazprom has declared the force majeure, and this is a 2.5 million ton of contract. They are not supplying the cargoes since months of June, I think. So what can be the impact of that? Wanted to know that have you sold out of this 2.5 million ton, how much of the volume has been sold to the customers? And in those contracts, whether it was mentioned that it is on the Gazprom volume and the force majeure from the Gazprom will also applicable to the customers or not?
Yeah, let me take this question. As you know that we have total portfolio of 14 MMTPA of LNG.
Oh.
And for current year, Gazprom is supposed to supply 2.5 MMTPA of LNG. That if you work out, it will. They actually are supposed to supply almost 36 cargoes during this calendar year, because the LNG contracts are on calendar year basis.
Oh.
And but there has been certainly supply disruptions, and it has happened since late May 2022. When I am saying so, it means till almost May the cargoes were coming. And if you talk to me till date, Gazprom has not supplied almost 8 cargoes. Oh, okay? 8 cargoes. 8 number of cargoes if you talk to me till today. Okay? Those supply disruptions started sometime in May, but they in between also gave 1 cargo to us in June.
Okay.
So this is what about the current situation, the portfolio, what we have total, the contract we have with, Gazprom, and the supply situation till date.
So Gazprom has not declared the force majeure. It is that they are not able to supply the cargoes.
Yeah, Gazprom, what they have said, basically, their regulator, basically, this has now become a company based out of Germany, because we had a contract with Gazprom, then in between the constitution or parents changed. So in order to secure the supply for, Europe, they are not certain about, supplying LNG under this contract. They are not said no, that they will not supply, but they are not scheduling at the moment.
So, sir, how are we dealing with the situation? Because the 8 cargoes are not a small number. I think it has impacted our the volume, and we have probably sold large part of this 2.5 million ton to the customers. So, are we obliged to meet this volume from the other sources of gas of GAIL? Or how is the situation with customer, and how are you dealing with that?
Yeah, you're right. The situation is certainly an area of concern if I talk to you today. I cannot say what will happen in future. If I talk to you right now when I'm talking to you, certainly it's a concern. So what GAIL is doing, GAIL is actually honoring its contract. What we are doing in order to honor the contract, all contracts have, take or pay levels.
Oh,
take or
60%, 80%.
Let me. So take or pay levels are normally for the user. There are below level also supply by. So we have started supplying our volumes at the take or pay level.
Oh.
Okay. So that take or pay level is enabling us. That is one solution I'm telling you right now how we are mitigating. That take or pay level is enabling us to deal with the situation partly.
Mm-hmm.
Secondly, we ourselves have cut down the load for our Pata petrochemicals. So that is also helping us. Thirdly, what we have done, we have started, though we are otherwise doing this as a course of, risk mitigation or bringing cargo in advance or taking later. So we have been doing some time swaps. So we are advancing our cargoes through swaps, which are supposed to come, say, in 23. We have done some of the transactions. That is third. Fourth, what we have done, we had some unallocated cargoes at United States. So we have hired ships for that, so that the unallocated cargo, which we were thinking at that point of time, we can use the arbitrage, sell in the international market. We are thinking that with those ships, we will bring the cargoes to domestic market in order to mitigate the situation. And lastly, if we still feel that there is some shortage, we will go for a spot purchase to meet the requirement.
So will this impact our profitability in a significant manner, given that we are the Gazprom contract at whatever 30% of the oil price, and you are buying some of this volume which is in the spot market which is substantially higher? Will this impact our profitability in a significant manner?
So,
or a natural gas trading business?
Yeah. So again, we are talking as of today.
Yeah.
So you can say that profitability certainly will hit, not significantly. Let me again explain your detail. Certainly there will be an impact on profitability. Nobody can deny if the situation remains like what we are talking today. And that's how we are mitigating this situation or overcoming this situation through various measures. We are avoiding, by doing these measures, we are avoiding purchase of spot cargoes. But what has happened? This volume which is not coming from, Gazprom is almost 7 to 8% of our total portfolio.
Correct.
So to that extent, in order to meet that, we have started, using take or pay levels. So suppose, because there are different take or pay levels in different contracts, suppose we are reducing to 90%. So to that extent, the marketing volume and transmission volume has come down as of today. And if situation persists, certainly will be there lower in tomorrow. But tomorrow I cannot say what will happen. But I am only hypothetically supporting this situation. But as of today, yes, we have cut down the supplies to take or pay levels. So it is to that extent, certainly there is an impact.
You mentioned that it is 7 to 8%. It is actually for 14-15%, right? You have a 14 million ton of LNG commitment, and there is 2.5 million tons. So approximately 15% kind of a number?
Yeah. Let me tell you. I said in terms of total volume, if you go over RLNG, yes, it's 15%. So if it is 15%, 10% we are cutting through, take or pay, then we are doing other measures which I explained you in detail.
Oh, sure. Got it, sir. So one more question, if you allow me. So how do you see this international prices which has gone through the roof spot, and country is also having the consumption is also coming down, particularly the volume at CGDs are under pressure, given that the blend has gone up to around $10.5 per MMBTU. some of those industries are not able to afford this kind of. How do you see this overall gas demand in the country, and also in the context of upcoming this MJ field auction, which Reliance probably will do in next couple of months? In that context, how do you see this LNG demand or LNG import in the country view?
देखिए, if you talk of today's spot LNG price, nobody is going to come up. As far as the new conversions certainly will take a hit. But the plants which are already on gas will somehow are taking, because they are on long-term basis. They have some spot contracts. But if you talk of new conversions, certainly then there will be an impact on new conversions until the situation improves.
Okay, sir. Thank you. We'll come back in the queue.
Yeah.
Thank you, sir. We take the next question from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Sir, just to continue the previous point, you mentioned implementing take or pay in lieu of the lost Gazprom cargoes. So what does that mean, sir? You are paying the consumer the differential in price?
देखिए, टेक और पे लेवल मैं डिटेल में बताता हूँ. Now take or pay level is for consumer first. If consumer does not take that quantity, we have right to put take or pay gas price. But there is one more level, supply or pay, which is normally below take or pay level. So in terms of contract, we are complying the contract. We are paying even more. We are supplying the quantity more than the quantity we are required to comply the contract. So there is no question that GAIL will pay for differentials.
Understood. So, sir, इसका मतलब ये हुआ कि if for assuming the 2.5 million ton Gazprom cargo is not available through the course of FY23, the Q1 trading gas marketing EBITDA should sustain, sir, for the rest of the year on a quarterly basis around 2,500 crores.
So Q1 EBITDA will have some concern if you talk of Q2. Let me tell you very frankly. Because Q1 did not have that impact, again on basis of hypothesis that Gazprom cargo will not come in Q2. If we continue with that hypothesis, so certainly more number of cargoes will not come in Q2, and to that extent our marketing and transmission volume will have an impact, and certainly will have an impact on our marketing EBITDA and marketing spends, whatever you call.
Okay, sir. So in marketing EBITDA will turn lower versus Q1 because of the lack of Gazprom volume. But to give you a sense, sir, last year second quarter marketing EBITDA was 1,100 crores. This year it is 2,400 crores. So it's fair to say that the second quarter should be somewhere in between, even without the loss of Gazprom volumes.
Actually, again, it's a very, very tough, or very, very difficult question to answer. We said in one of the earning call for yearly earning call we had in Mumbai and also Mumbai or investors meet, that on a yearly basis we said we will be able to earn 2,500 crore at least on marketing margin. That we said. But if we talk of Q2, certainly 1,100 crore we should achieve. But again, it depends on what will happen on all those accounts. Because we don't know the way the LNG prices are behaving. Really, it is tough to give you any number.
Sure, sir. My last question is, at this point of time, till the Gazprom cargoes don't normalize, we should expect petrochemical utilizations to remain low, because that is one area where you'll be cutting down consumption.
As of date, yes, that's our plan, that if Gazprom cargo does not come and we are not able to source alternatively, or then certainly we will continue to keep the Pata plant production at the current level or around that level.
Understood. Thank you very much, sir.
Yeah.
Thank you. We take the next question from the line of Sabri Hazara from Emkay Global. Please go ahead.
Yeah, good afternoon, sir, and congratulations on good numbers for Q1. So I have two questions. First relates to this Gazprom only. So you mentioned that the hit will mostly be on the transmission marketing and petchem volumes. So compared to Q1 run rate, what is the current rate? I mean, what kind of a decline are we seeing, say, as of now, as of today?
In transmission volume, marketing volume, and also in petrochemical, you are asking everything?
Yeah, all three of them, yeah.
So, let me tell you, if we have supplied on an average basis 100 MMSCM, transmitted 100 MMSCM, marketed 100 MMSCMD in Q1, so the state RLNG cut by 10%. 6 million cut we have already done. So out of 100, 5 or 6 million, so almost 95 million, 90 to 95 million we may be marketing. Exact number difficult, but a range can certainly be shared because we have cut down by 5 million or so. And in terms of transmission also similar cut will come. And apart from that, not only that cut will come, and Pata petrochemical consumption 2 million if we keep at continue at current level, so that will be at 7 million as compared to marketing, because that transmission includes the internal consumption as well.
So that's Pata, I didn't get it. You said that, how much of Gazprom was being supplied in Pata earlier versus...
No, we are not very specific to any particular supply to Pata. We have always been maintaining that we are a portfolio holder. We used to supply Pata out of our portfolio. Gazprom was part of our portfolio. Gazprom is not coming. So therefore there are issues in overall portfolio, and that's how we have stopped or reduced the supplies to Pata, because overall availability is less. But there was no specific allocation per se to Pata.
Right, sir. And sir, second question is on your petrochemical. Actually, the realizations versus the South Korean benchmarks have expanded significantly in Q1. So is it some specific grades you are selling or something of that sort, or is it like it is normal line of business?
Just hold on, because this is very, very specific question.
I didn't got your question, sir. Will you repeat it, please?
I mean, if I compare the petrochemical realization, which is the revenue divided by sales volume, so that number we compare with the South Korea benchmark. I think it comes from Bloomberg. So that differential used to be 15%. It has gone up to more than 30% now. So I mean, your products are being sold at a premium versus the Korean benchmark. So
yeah, true.
Any reason behind that?
The thing is that during Q1 and this thing, there were domestic plant shutdowns for there, and the domestic prices were not in line with that, the international plant report. So the domestic player will charge the reasonable price, and today now slowly this marketing is correcting, and now it is taking the adjustments.
Okay, the domestic prices were at a premium during Q1.
Yeah, during that period, yeah.
Okay. Okay, that's all from my side, and all the best. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Krati Sanklecha, Credit Suisse. Please go ahead.
Hello, am I audible?
Yeah, very well.
Yeah, hi, sir. Sir, two questions. One, PNGRB has not fixed any tariff for phase 2 of Urja Ganga. So right now, whatever volumes are flowing through phase 2, what tariff is being charged for that?
So yes, you are right. What has happened in sometime in 2019, PNGRB fixed the tariff Urja Ganga for considering the capex of around 1600 crore and capacity of 7.44 MMSCMD. So it was based on that, and that is the tariff available to us for charging with the customer. So we are continuing to charge the tariff as approved by PNGRB. Then we have, in terms of contract, we have a clause that once the tariff is revised by PNGRB, we'll charge the revised tariff. That means, in order to you explain in further detail, that this pipeline has a capex of almost 15,000 crore. If we reduce the capital grant of 5,000 crore, almost 10,000 crore, I'm talking on broad basis. So that pipeline tariff has to be worked out considering the differential capex of almost 8,000 crore and capacity addition of from 7 to 16, that is almost 9. I am talking of total capacity, not. So that tariff is significantly going to go up because on NPV basis it has a further impact. So tariff will be around 140 or 150, subject to review and approval by PNGRB. So those tariff, once approved by PNGRB, will be available to GAIL. Until then, we are charging the tariff of phase 1.
Okay. And sir, in the transmission segment, the profitability was very weak this time. The volume was higher, the realization was also higher, but still the absolute EBITDA was lower QOQ. Seems to be higher OPEX. I did not understand why higher OPEX.
It's not due to higher OPEX. Let me tell you, you must know that the GTG we use for running the compressors, gas turbine generator, has an allocation of APM gas. APM gas used to be at a price of $2.9 per MMBTU, which has gone up to $6.1 per MMBTU. So we are booking the cost at a higher level. And the same is available through tariff adjustment when it is announced. Until that is announced, so our OPEX certainly will be higher, and therefore, even though revenue increases, the margins will be lower.
Okay. And sir, just last one question on the LPG volumes. The LPG volumes have been consistently weak for many quarters now. Till FY21, FY20 actually, we used to be 300,000 million ton per quarter. Now we are hardly 200 to 50. What has changed here?
Nothing changed except the availability of gas from ONGC, biggest gas.
Okay, so can you help me with what gas was allocated in 1Q? The APM gas?
1.7? 1.75 MMSCMD.
Okay. Thank you, sir.
Yeah, pleasure.
Thank you. We take the next question from the line of Sujit Lodha, Birla Sun Life Insurance. Please go ahead, sir.
Hi, sir. Thanks for taking the question. So first question would be regarding going back to the Gazprom volume. So what are the terms with both Gazprom and your customers in case if they tend to deliver the promised volumes, how do they make up for that? Is it over the course of time they have to make up for the same volumes? And similarly, how do you make up if you fall short of supplying the volumes to your customers?
Actually, your voice is not coming that clearly. I'm sorry. You have to repeat once again.
So am I audible now?
You are audible, but it was not coming so clearly. Yeah.
Should I repeat my question?
Please.
Yeah. So basically on the Gazprom contract, what are the conditions with Gazprom if they fail to deliver? So how do they make up for it? Is it on the balance tenure of the contract that they have to make up for the volume? And also vice versa, how do you make up in case if you tomorrow fall short of supplying your volumes, the minimum take-or-pay volumes as also to the customers? How will you make up for that? And what are the terms on contract?
So with respect to Gazprom contract, so it is not actually right at the moment for me to give you very nitty-gritty of the contract. So they are, I will tell you on broad basis, if they don't supply, there are penalty provisions.
Okay.
So we'll take up that, and how we will take up that, how they will supply, and what are the measures. Those are matters of taking up a negotiation. That's why it's not right on my part to go into the details of those provisions. With respect to customer, so let me tell you, it's not in most of the cases of back-to-back contracts with Gazprom. We have a portfolio contract.
Right.
So it's not that when Gazprom is not supplying or supplying, so we have made portfolio contracts, and till that we are not going below the contractual provisions which we are supposed to supply. So therefore there is no question as on date arising that we have to make up for the gas.
No, that I understood, that you have a contract based on portfolio and they don't care whether it's coming from Gazprom or any other source. But so basically at the price you will be able to supply, that's what you're saying. The minimum contracted volume you will be able to supply at the contracted
more than minimum contracted volume we are supplying, as I explained to other
No, that would continue in future also, irrespective of where the Gazprom supply goes.
Yeah. We hope to do so because there are not many measures, because this situation has happened all of a sudden. So certainly when we get time, we are getting now time to overcome those situations, and we are working on that.
Okay. So, and while obviously you cannot divulge details on the customer side, but so which would be the biggest sector which will be consuming this gas?
Sorry, biggest sector?
Which will be the consumer for this gas?
Again, there is no specific. That's what I told you, because any biggest customer, one of the biggest customer is fertilizer.
Okay. 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 Thanks so much. I'll come back in the queue if I need again. Thank you so much.
Okay, please.
Thank you, sir. We take the next question from the line of S. Ramesh from Nirmal Bang Securities. Please go ahead, sir.
Hello.
Yeah.
Yeah, thank you very much. So I just had a couple of thoughts. One is on the pool gas purchase for the CGD sector. If you can tell us what is the volume you would have purchased on behalf of the CGD companies, and what is the kind of margin you would have earned? And is it included in your gas marketing segment in terms of the volumes and margins? And what is the kind of volumes you would have purchased on behalf of CGD companies? And would the margins on that be comparable to your average margins in gas marketing?
So last question first. Our marketing margin, which we normally add, is the margin we charge. Okay. There is no any significant delta or anything. We get a standard marketing margin which we charge. And with respect to what kind of volume we are purchasing for supplying to CGD, it is around 10-12%.
10-12% of
total volume being consumed by CGD.
The total volume. So how much would what is the volume in MMSCMD which you have included in your marketing volume? I may understand.
Sorry.
So how does that translate to in terms of the?
You can say it actually depends month to month, because CGD demand is ever increasing. So 2.5 to 3 MMSCMD.
2.5 to 3. And secondly, how much of that gas is procured from spot market? Because obviously the APM gas allocation is falling short. So what proportion of that are you buying from the spot market?
So this is what we are buying through spot market. That's what I was telling to you. 12, 13%, whatever ratio comes. 2.5 MMSCMD to 3, depending on the the forecasted demand or last consumption based on the pattern we are at. So that is the volume we are marketing as a spot or volume which we are blending.
So the entire thing is on spot volume. Okay. So if you look at your segment EBITDA, which you've shared with us, LPG, it's very interesting to see that you have been able to maintain the LPG EBITDA at slightly less than fourth quarter and similar to last year first quarter, in spite of the fact that your APM gas price has gone up from $2.9 to $6.1. So we would like to know how you have been able to achieve this sort of EBITDA numbers for LPG.
So I explained in the opening remarks that the LPG prices are significantly higher as compared to Q4. There is around 12,000 rupees per metric ton higher as compared to Q4. So you are right that the input cost has increased, but it has been offset by the higher LPG prices.
So 12,000 rupees, sir, is not that big compared to the original price. So see, because the gas prices have almost doubled. Even if you take the fourth quarter from 2.9 to 6.1, it's doubled.
So the impact of dollar increase is around 4,000. So almost it is offsetting. There may be some because if you consider 4,000, $3 is 12,000.
Okay. So if I may ask you, how do we read the trend for LPG and other hydrocarbon margins for the rest of the year, assuming that the current APM gas prices sustain? Would you be able to maintain the same sort of pattern EBITDA?
So it is difficult to predict future oil and gas prices. So I can only say, based on the current prices, what we are doing will be able to do, but there will be a likely increase in October of APM gas prices. To that extent, whatever price increase, our margins will go down.
Okay. So if you were to take a slightly philosophical view on the gas sector, we are seeing very significant pain because of the high gas prices, and a lot of the volumes are being sucked in by Europe. And if you look at the numbers being quoted by consultants, most of the LNG projects are all tied up with long-term contracts. So how are we approaching the process of negotiating for our future contract volumes? Because Petronet LNG is due for renewal of their Qatar gas contract. So what is your reading in terms of being able to line up future gas supplies from LNG projects for long-term contracts on contract prices? And to what extent will we continue to be exposed to having an increased share of our gas requirements coming from the spot market? If you can share your thoughts, we'll be grateful.
So we have been sharing our thoughts in this regard. We were in the market for sourcing 0.75 MMTP of gas for coming 5 to 10 years. But unfortunately, because of the current situations, we did not get the response the way we were expecting. So again, we are now scouting the market for various indices, whether it's the United States gas or the Middle East gas or any other source of gas. So currently, we are in the market for sourcing long-term gas, not only to meet the current crisis, but also to meet the increasing demand of the country. So as of date, I can only share that we are in the market.
Okay, thank you very much and all the best.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address all the questions from the participants in the conference, please limit your questions to 2 per participant. Thank you. We take the next question from the line of Kirtan Mehta from BOB Capital Market. Please go ahead, sir. Mr. Mehta, your line is in talk mode, sir. Please go ahead.
Thank you, sir, for giving me this opportunity to sort of take the CGD supply question further. What is your you mentioned that you are not able to secure the long-term volume or still under finding the long-term volume. But is there any plan to sort of supplement this volume with a short, medium-term volume of 12 to 18 months, which might be available?
Let me tell you, we are in the market for all kind of, periodicity, short, medium, long. But the market today is such that short-term volumes are not available at the desired price. That's the challenge we are facing. So, though we are there in the market, but that's the challenge we have.
Right, sir. And how do you see the LNG price sort of? There could be a possibility that we might see the continued surge in LNG prices during the European winters. So what's the plan to sort of protect CGD sector against that additional surge?
So plan is that we are scouting the market, or what can be the other plan. So you can only source the cheapest available price, and that's what we are doing. It's difficult to predict what will happen, but we are doing that.
Right, sir. Just one more question on the Kochi-Bangalore pipeline. Is there any further update in terms of the finalization of the plan, Kochi-Bangalore pipeline?
So there is no further change in that. There is no further change in the status.
Thank you, sir. I'll come back in the queue.
Thank you. We take the next question from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
So, sir, what is your volume which is on the long term from Qatar and Gazprom? What is the long term and what is the short term you are sourcing?
No, can you come back? What is our long-term volume from Qatar? That's what the question first you asked?
Yeah, Qatar and Gazprom and all long-term contract included.
Yeah, let me we have 14 MMTP of approximate LNG contract. We have almost 4.8 MMTP from Qatar, 5.8 MMTP from United States, and then almost 0.42 from Gorgon, and then what else? 2.5 from Gazprom. That's around 40.
So right now only this 2.5 is the problematic area, right?
Right.
So similarly on the sales side also, all your sales is a fixed price, or what percentage is fixed price and what percentage is spot?
I also don't know. So because we have all kind of contracts, we have the back-to-back contracts with marketing margin, we have the contract with the index at which we bought, and we have different marketing margins. We sell on fixed price, not for a longer period, but for a period, say short contracts of month or 15 days. So we have all kind of contracts. But fixed price contract you are talking about is not for a longer period. It's only for a smaller period of 15 days or 1 month or so.
Okay, sir. Thank you. All the best.
Thank you.
Thank you, sir. We take the next question from the line of Vishnu Kumar from Spark Capital. Please go ahead, sir.
Thanks for time, sir. Sir, just to summarize, out of your 100 MMSCMD that you're doing in natural gas marketing, about 9 MMSCMD ideally should come from the Gazprom contract, which is roughly 2.5 is 9 MMSCMD, of which 3 or 4 is roughly getting impacted. Is that the right understanding?
What you said in last 3 or 4 what?
No. You have 2.5 million ton would be 9 MMSCMD roughly.
No, let me tell you. 2.5 you are arriving at 9, but actually out of almost 39 cargoes, 36 they are supposed to supply in terms of contract. 3 they have right to supply or not to supply. So we consider that 8 to 8.5 MMSCMD of gas, which is supposed to come from Gazprom.
Okay. On a monthly run rate, or if you can just say what is the shortfall that you're seeing on even a percentage basis?
So so in last quarter we did not receive 8 cargoes. Okay. Since May.
Got it. So roughly almost 80% of the volume that you are supposed to get, you did not get, because if I take 38 or 36.
The situation in last quarter, I cannot say what will happen in this quarter.
Understood, sir. The second question is that normally you have some spot allocation out of your overall portfolio. Does this mean that you don't have any spot for the next couple of quarters, assuming the current situation holds, and you may have to source a little bit of spot gas and supply to a few customers if required?
No, we certainly source for spot also, because the biddings comes in between, whether you talk of fertilizer bidding or whether the spot customer requirement. There are customers who are also taking at this price to meet their requirement. So we are there in the market for spot for sourcing and supply side both.
Okay. Can it be said, sir, that out of this 100 MMSCMD, earlier 90-95% used to be, you used to say that 80-85% to 90% used to be contracted, some 10 MMSCMD or 10% used to be on spot. Now you don't have any spot. That's the only question I'm asking.
And the spot is actually, I also said spot is there. If you talk of EPMC contract, the fertilizer supplies which happens quarterly bidding, that is spot.
Okay.
So spot is there, spot will remain there. But it may reduce certainly, because some of the volumes may not come up, top-up volumes may not come up at this price. The spot is there significantly.
Understood. Sir, in the past you mentioned that some of the US contracts in 2020 we have logged in on time swaps, and they will likely roll off in a year's time frame. So next year, I mean, I'm just hypothetically asking that the US contracts which you have kind of entered into in terms of contracts, they will be available to you next year onwards, which will ease your some of the issues that you currently have.
So numbers is not there. Certainly they are available. Numbers we can give you offline, but yes, that's there.
Got it. And sir, if you could just give your internal consumption segment-wise gas transmission or on a normative basis, petchem, LPG, if you could just give the internal consumption of gas segment-wise.
So I think it's not right now. I am not able to share.
Okay. And on your Urja Ganga line,
maybe, I'm sorry to interrupt.
this is my last question.
May we request you to come back to the question queue? There are participants waiting for
Got
their
it.
turn.
Thank you.
Thank you. We take the next question from the line of Varatha Rajan from Antique Limited. Please go ahead.
Thanks for taking my question, sir. Couple of questions. One, LPG allocation, you mentioned 1.75 MMSCMD. That is just the allocation, or the actual supply always meets the allocation, or does it fall short?
No, it's there. Right now it's there.
Right now it is meeting the allocation. Secondly, this CGD, the pool pricing, if you can just give us some insight into how the mechanism works. For example, last time it was 895, it is 1052 this time around. So when you budget for the increased demand and you place an order in the spot market for the LNG, on a delivered basis, and that is how this number shifts from month to month, or how does it work?
And this number changes month to month, and the price is based on the availability of the domestic gas and the quantity, the actual consumption, and based on the farm base price is calculated with the mix of domestic gas and the other spot source gas.
So the requirement is taken on a quarterly basis or on a monthly basis?
So as per the recent guidelines of MOPNG, the consumption numbers are taken on a quarterly basis, and every entity is allowed to consume up to 102.5% of UBP gas. And if the consumption is higher than that, they will top up it with their own sourced LNG or whatever, and that will come up in the next consumption. Whenever the consumption figures are revised after a quarter, that will be taken as the consumption.
So if I may say, if my understanding is correct, so if the requirement is last quarter consumption was 100, this 2.5 extra is something which you anyway place an order for, or do you vary the volume month to month based on what you see as the actual intent placed with you by the customers?
So as I said, the consumption numbers have to be revised after the end of quarter.
Okay.
So monthly, the consumption numbers are not revised monthly.
Okay, sir. Sure. Thank you, sir.
Thank you, sir. We take the next question from the line of Yogesh Patil from Centrum. Please go ahead.
Thanks for taking my question, sir. So both of my questions are related to current higher LNG prices scenario. So in first case, can you please update on the upcoming fertilizer plants, and do you see any delay in commissioning of fertilizer plants due to the shortfall of LNG?
Now two fertilizer plants, HURL Gorakhpur is already commissioned. Now Sindri and Barauni, both are under pre-commissioning phase, and they have their plans to light up the reformers, and I think the commissioning is due sometime end of August or September. They have few technical glitches which they will be sorting out during the next 1 or 2 months.
Okay, so you don't see any kind of a delay in commissioning of fertilizer plants due to the higher LNG prices or shortfall of LNG from the long-term contracted volumes?
No.
Okay. So, sir, second question is again related to the rising gas prices or LNG prices. Do you see any deferment or postponement of the commissioning of new geographical area for the CGD sector?
Difficult for us to say, because its individual entity will take a call, commercial call. But as far as gas based on UPP, which is available to all these CGDs, will be available to them. But now they will see their commercial viability, and they will see alternative fuel price based on which they price when they will commission or what, how, or when they will supply.
Okay. Thanks a lot, sir.
Okay.
Thank you very much. We take the next question from the line of Vikas Jain from CLSA. Please go ahead, sir.
Hi, Rakeshji. Thanks for taking my question.
How are you?
Very good. Thanks, sir. So, just wanted to understand this Gazprom situation on a QOQ basis. So, if last quarter anyways your volumes were much lower, then why? I mean, I understand that part of that demand was anyways offset because of your your petrochemical plant functioning at a lower level. But if I were to look at that and you maintain the petchem plant at lower utilization, then why would the situation change dramatically this quarter versus 1Q?
We have also not said so, Vikas. We have also said that one of the with reference to one of the question that whether you will be able to maintain same marketing spread, I said difficult or may not be possible. Then question was whether you will be able to maintain rupees 1100 crore as you maintained last time. I also said it's really in difficult situations, difficult to say with certainty. So yes, there is a challenge in this quarter.
No, so what I mean is that last quarter, that is 1Q, you did not have Gazprom in any case. Okay. So only one cargo was there, right?
No. In last quarter, we had full supply until
1Q. 1Q you had full supply, is it?
That's what I was trying to explain, because in last quarter until May end we had normal supply. Then for June, till June month we got only one cargo, and in between there were interruptions. So you can say that last quarter was not that greatly impacted. But in this quarter, there is no certainty as far as whatever communications we have, though we are taking at all levels, including the government to government level, including we are talking to Gazprom. But as of now, when I am talking to you, there is no certainty about the availability of Gazprom volume. If it comes, certainly we will be better off as we were there in Q1, but it's still difficult to say as of now.
Sorry, so that was my misunderstanding. So just to understand that, so broadly you said that your volumes would be down by roughly 6-7 MMSCMD, both in the transmission side as well as in the marketing side. That is the impact of Gazprom?
So we currently we have already reduced almost 5-6 million per day of volume from supply side. If transmission you consider 7 or 7.5, because internal consumption is part of transmission, not the marketing volume.
Okay. So basically whatever is the 1Q average, our current transmission volumes are about 6-7 MMSCMD, lower than that. And petchem, at what level of utilization are you kind of running to manage this situation?
Currently we are running around 50%.
Around 50%. Okay. Yeah. So basically the hit is three-way. Volume of both marketing and gas transmission about 6-7 MMSCMD, and petchem being run at 50% utilization.
Yeah,
right?
or maybe little lesser than 50.
Okay. And with, if, since there is this talk of Europe reducing energy imports from Russia by, say, from, I think, 5th of December. So if that really plays out, would that free up more gas to be available to us, or that's something that is not, that's not the way to look at it?
Free of which gas? Mostly they are dependent on pipe gas.
Right. Okay.
So available, the free up of pipe gas will not make LNG available.
Yeah. Okay.
So that is a challenge.
So this is simply because of production issues, or since you said that your contract with the German subsidiary of Gazprom, so what exactly is causing this? This is a production issue?
So basically, it's a portfolio supply, and they are telling that we are not able to supply you because in order to meet the Europe, because there's some safety, some regulators there in German. They have said that in order to meet the European requirement, we are not able to supply you from portfolio, but they have not said until they will not supply, how much they will not supply. That is the current situation.
No, so that's why I asked that, because of that if Europe reduces imports, so essentially even that supply which is being kept by the German regulator would also get freed up, or no? This is
very, very difficult, because very difficult to say what will happen, how it will happen. Very difficult. So uncertainty is there.
So in the current scenario, automatically versus the 1Q base, we are 6-7 MMSCMD down.
Right.
So basically, how do we see volumes rising from here? With these fertilizer plants coming in will allow us to get more US LNG into India, and that is how volumes are rising? Yeah, in a scenario till Gazprom is not addressed.
So we are taking a lot of actions. One is that in order to make new plants, availability of gas for new plants, we already have the supply lined up from US. That we have already accounted for plants which are likely to be commissioned. We have kept that in mind. Gas is available from United States. We had unallocated cargoes. For that, we have already made arrangement for ship chartering. So we will be able to bring the volume in order to supply that gas to those fertilizer plants. For that, we are already there is no concern about that. And further, in order to meet the further deficit, I was explaining to other participants that we are taking 2, 3, 4 actions. One of the action which we have been taking for last 1 year, that we are in the market for contracting the gas on long-term basis. We had invited tender for 0.75 MTPA, but there was no good response because of current situation. So we are also discussing with some of other players for sourcing of gas. We are also there in the market, United States. So volumes are available, but only challenge that we getting volume in 23, then 24. Thereafter the volumes are available, but there are some suppliers which are capable of supplying some of the volume in 23, 24. So we are working on that, and hopefully let us hope for best. We are working on that.
So just one bookkeeping question. Any reason for corporate expenses to be so much lower? And number 2, can you tell me what proportion of your US volumes are not sold are not contracted for selling outside India in 23 versus 22?
So I have to check that. 23 not sold. Yes, sold.
Basically, what proportion have you kept for India in 23, and what proportion did you keep for India in 22?
So actually, because readily it's not available.
Okay. And on the corporate expenses things, any reason why expenses are lower, corporate expenses, the way you report as a segmental one?
Actually, corporate expenses has not gone down. If you have gone through our Q4 accounts, we provided a provision for ECL, financial guarantees we have given to our US subsidiaries. So that was around 170 crore. And second, only that CSR was in December. In Q4, that was the one major 170 crore.
Okay, so basically nothing one-off here, but the sequential quarter had was bloated because of that. That's what you mean.
Yeah. बता दिया ना. That's what I explained. So this actually in Q4 it was 170 crore provision, which is not there in Q1 23. So that one-off was in Q4 last year, not this year.
Sure. Okay, sir. Thank you so much. Thanks for your time.
Thank you.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you very much. Hopefully, we responded most of the questions, but some of the questions we might have not responded. So participants are free to call us offline, and we will be able to respond for the questions which we could not respond, and which questions which they have and they could not ask. And thank you very much for taking interest in us. That's all.
Thank you very much, sir, for your time. Thank you all to all the participants. You can log off now. Thank you very much.
Thank you, everyone. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.